Okay, cool. Awesome. Hello again, everyone. I hope you're all doing really well. So I thought I would try the live stream yet again after Monday night's one. It was a bit of fun. Spoke about Camber Energy and then had a good discussion about Exela technologies. So I thought I'd try the format again. It's probably pretty convenient for me in the sense that, like, 'cause I'm fairly busy with work and my little daughter is asleep, so I've got to be a little bit quiet. So it's probably a bit more convenient to actually just talk a little bit live where I can. I'll still try and make videos too, because I know there's a lot of value in some of the videos I do, because I'm able to like better integrate images and have a better thought out process on what I want to say. Anyway, I won't bore you too much with those sort of details. I just thought, well, today coming to the market, the big story is obviously the Fed interest rate decision is about to drop, and that's at 1 p.m. And I think yesterday, Tuesday's trade, we saw a fair bit of stagnation in the market because it's, Monday was pricing in like rumours that the Fed could be lifting the rates by as much as not 0.5 but 0.75 of or 75 basis points, or 0.75%, which would be a huge rise. I don't know that much about the history of interest rate rises in America, but that would be probably pretty much as big as you'll get anywhere, really. That's a very fast interest rate hike. So before Monday, the market was thinking it was going to be about 0.5, but as the inflation figures came out last week, and inflation's now hit 8% more or less in America, the idea of having to ramp up interest rates much faster is something that a lot of analysts are expecting, and that's going to be something that could really, I guess, spook the market. So I think basically we could get a few different outcomes today. The two most likely I think is the 0.5 rate rise, and that could be interpreted by the market as a bit of a confidence signal, in the sense that like the markets aren't too out of control at the moment. But some may also see that if it only goes 0.5, so the Fed's not acting aggressively enough to control inflation. I've heard a lot of pundits out there who think that the Fed actually can't control inflation at the moment. It's gotten too far out of control. It's going to get a lot worse before it gets a lot better. But anyway, so I think 0.5 would be probably a nice neutral reaction by the market. And you might actually see a bit of what was lost on Monday regain, if that's the case. If we see 0.75 dropped, we could indeed be in for a bit more of I think a big sell-off in the market, because that's like just a bad signal. There's one other alternative that could possibly come out of all this, and that's that the Fed actually only raises the interest rate by a smaller amount, 0.25, or even if they don't raise it at all, which is always a possibility. They take into account many different factors, obviously. One thing that they would consider, and it's not a huge factor, but they would consider it, is the way markets have been reacting. They know that a lot of financial instruments are not performing very well at the moment, so that could influence their decision on whether or not to hold back interest rate or reduce it, or so that could be a factor that plays into it. So we could actually see something less than 0.5. I'm pretty sure we are going to get a rate rise, and it's hard for me to actually say how much I feel it will come, being in Australia, but how high it's going to be. But my gut feeling is that we are going to at least see a 0.5, but there's a possibility for it to go either way. I think if we got a less than 0.5, we actually might see a very positive market reaction. So that is something to keep an eye out for. And what's, I suppose, interesting for me is, like, if we're looking at interest rates in America, obviously I live in Australia, and I've several properties with mortgages on it, so I'm very interested in what's going on with interest rates. And I think if the Fed were to actually raise interest rates really high by 0.75, it might set a bit of a precedent in these current settings for other central banks around the world to perhaps follow suit and lift interest rates. So I'll just, not to bore you too much, because I know most people are more interested in what's happening in America, but in Australia, inflation we only report inflation once a quarter, which is pretty annoying. America does it, you guys do it every month, which is much more useful, but we can still raise the interest rate every month, unless there's like a emergency sort of setting. Anyway, but right now, inflation was last reported in Australia at 5.1%, so it's not as high as it is in America. But there's a lot of things happening in Australia which are perhaps going to actually push inflation up even further. And while all the governments talk about we've got to bring down the cost of living and we've got to rein in inflation, they're doing things at the moment which are actually going to push push inflation a lot further. So just today, for instance, two big things happened in Australia. They actually agreed to lift the minimum wage by 5.5%. And that was kind of a late election promise that was made recently. And that's actually, if you're on minimum wage, it's obviously great because 5.5% is actually higher than what Australia's current inflation rate is of 5.1%. But our central bank governor has actually come out and said that he's expecting inflation to hit at least 7% this year. But basically, because they are now making businesses pass on a pay rise, 5.5% pay rise to the lowest paid people. I think they said about 3 million people are going to have a pay rise because of that. That's a lot of businesses that have to start finding money. And the impacts of that are either going to be passing on higher costs to customers, which obviously then you have the cyclical problems that, well, people are going to be less likely to buy because things are more expensive. The other thing too is that it could lead to cutbacks in jobs. And, like the Fed in America and the Reserve Bank here in Australia and other central banks are all kind of working in a context where they have quite high employment. I'm not sure about in America, but one thing with the employment I've noticed here is like we have a very high employment rate, but if you look at the participation rate, which is the actual percentage of people in the population actually trying to work to get a job, and that's where they derive the employment rate from, it's actually lower still than it was pre-pandemic. And I think it's like that in a lot of other countries too. So while unemployment might be quite low in a lot of countries, there's a lot of people who are just not trying to get jobs at the moment. So the participation rate is a bit lower. So I feel like the unemployment figures are a little bit of a myth. There's just less people trying to get jobs. Anyway, so we've had basically minimum wage has gone up in Australia by quite significantly, 5.5% is quite a bit. It's effectively a raise, a wage increase because it's higher than inflation. And the other thing that happened today is like not as significant, but even in New South Wales, the largest state here in Australia, they announced that all families who are have children in daycare or preschool, so basically ages 6 months to 4 years, they're about to get like several $1,000s back based on their commitment to that. And the idea is to try and encourage more people to get back into the workforce. So that's always a big thing they've done here in Australia, is like really subsidise childcare and that to encourage greater participation in the workforce. But again, and a lot of the other states in Australia are like playing around with similar sort of policies right now. But again, what you're probably going to see is, where's this money coming from? They're just going to be printing more money to, fund these cashback schemes. So while the governments are talking about we've got to suppress the rising cost of living, they're throwing actually basically throwing like petrol on the fire here, So it's pretty dire, I think. And I think one thing that's kind of really annoyed me a little bit about all the talk around inflation, a lot of the from central banks, it's the Fed and RBA very consistent with this sort of messaging. There's this idea that we have to raise interest rates. It's obviously going to cost people money when they raise interest rates because the cost of borrowing is more. That means people are going to be paying more to pay back their home loans, etc. That's the big thing where it hits. And it's kind of like they sort of say it almost in this kind of heartless way. We have to do it. People have plenty of money. It's fine. It's kind of the stance they take. It's I think the messaging behind it's actually a bit off and a bit out of touch. But anyway, that's not that. So anyway, I'll leave it. That's my little touch on that. That's what I want to talk about with regard to inflation and the Fed. The other thing I've sort of marked in this video is I'm actually just going to talk about a few of the stocks that I've been covering. Those being Camber Energy, Exela Technologies, Vinco Ventures. What else did I say? I said Camber, BBIG, Exela. And I'm going to talk about Roblox as well. That's a stock that people were talking about in my live chat the other night, and I was quite curious to explore. But I didn't know much about the company. It was just one that cropped up a lot, and I know a lot of people did talk about it. So it's just I thought I might just have a little bit of a look over it live for you guys. Or for whoever watches this. And the other one I wanted to throw in, I thought I would throw in one stock which I quite like, which I've been holding and slowly accruing for like basically since the market drop in the pandemic. That being a company called Iron Mountain. I thought it was good to talk about stock like that because one thing I don't like about my channel is I kind of tend to put out a lot of videos on stocks which people want to hear about, and they're a lot of like the retail plays. And that they're all good and all, but as you see, a lot of them aren't actually that good. They're actually quite high risk, high return plays, and I'm not actually that. That's not how I actually do a lot of my investing with stocks. There's a lot of stocks I pick that which don't sort of fit that sort of category, and so that's why I've put in Iron Mountain, just to give you a bit of perspective about another side of my investing. So I thought that was a good one to do. So anyway, I'll have a little look through it. Unfortunately, I don't know how to share my screen, which is really seeing if I can do anything here. No, I can't really. Okay, I've got to really work out how to do live streams properly, but so I can't really show you my screen at the moment, but that's okay. I'll just sort of talk you through what I'm doing. So I'll go through the stocks one at a time. First one, I'll have a bit of a look at. We'll start with Roblox to start with, because that's the new one. So I'll just give it a bit of coverage here. So like a lot of the other stocks yesterday, it had a down day. It still lost 1.28% or 34 cents. And a lot of tech companies actually had a mild recovery, with the Nasdaq finishing slightly up yesterday. So it kind of didn't perform in line with the market. But if you look at how it went in the aftermarket, it actually closed off 1 cent higher than its opening price. So Roblox kind of had a little bit of recovery momentum in the aftermarket yesterday, which is quite pleasing to see. And if you flip over to how it's going in the pre-market at the moment, let's see, where's it at right now? It's at 26.30 at the moment. So 26.30 at the moment. So it's technically down from where it finished in the aftermarket, but it's still up from where it was at the close of the regular session yesterday. So that's kind of how they're going there. So I'll flip into my platform where I do a lot of my research stuff. So I've got this. I don't know if it's available in America. It's actually a British-based company who I do my trading through, but they have a big presence in Australia too. They're called IG Markets. I'm not sure if they're in America or not, but they're quite a good trading platform, and they're really good with like research and stuff like that. Someone was asking me about that yesterday. So I go on here, I actually find a lot of stuff about Roblox on here too. So if I go have a look at Roblox, just a little bit of an overview of the company, flip over to the market data. So we can give an idea of how it's going. So in terms of, one thing I like to start looking at when I do a bit of research each day is just to see if there's been any kind of major news stories. And on my brokerage app, there hasn't actually been anything for Roblox. It's probably worth doing a little Google search as well, just to confirm that. So obviously get like opinion pieces about these sort of stocks all the time, but I don't think there's really been too much out. List of all the permanent sets in Roblox Royal. No, so yeah, there doesn't seem to be much in terms of stock related news out, and that's even including opinion pieces at the moment on Roblox. There hasn't been too much published that I can see anyway. If you know of anything else, please share it in the comments. This is a brand new stock to me, so I'm not going to pretend I know everything that's going on with the company. I don't actually fully have my head around what the company actually does, but I'm just trying to have a look through the stock objectively here. Okay, other things I can find out about the stock. So it's dropped another 2 cents in the aftermarket. Well, the pre-market's 26.28 now. So I can have a look at how analysts are rating the stock. So what's interesting is analysts have an average. There's 19 analysts covering the stock, and at the moment there are 10 that have a buy rating. Or technically 11 have a hold rating, 6 are neutral, and 2 have a sell. So and from a month ago, that's downgraded. So there was actually 11 who had it down for a buy, and only one that had a sell. So one of those buys actually dropped down to a hold, and one of the holds has actually dropped down to a sell. Anyway, but looking at that, let's not worry about that. So price targets are, the lowest one on the scale is $21, and the highest is 61, and they have an average of 37.63. So generally, most people are quite bullish on Roblox at the moment. Decent upside. You know, obviously some people have talked about for a short squeeze. I suppose I should look at what it's like in terms of short squeeze data, because I don't know, someone mentioned that's like a hot play for it. So Roblox short squeeze, what do we get? So it's technically not highly shorted with only 9.93%, but that's almost 10% of the stock shorted, and it's got 1.81 days to cover. So it's not quite a short squeeze. Can't hope CEI runs soon. We all do, don't worry. I'll talk about the CEI. Maybe need to call it CIA on CEI. I'll talk about CEI after this one. But yeah, so 9.93% float. It's not highly shorted, and it's got a borrow fee of 0.32. So there's not a lot of pressure on shorts to cover at the moment. That's obviously the stock's been floating down a little bit, so that's going to help. So if there is to ever be a short squeeze at the moment, I think you're going to have to at least see 2 days of good rallying to kind of trigger that, because there's an average days to cover 1.81. Still actually, but where there is a lot of shorts, there's a lot of off-market shorts. About 51% of the stock is held in short positions. Now, that's enough about Roblox there. One thing I like to, I'm not day trading, but I do like to, when I do my trading, let me start to my workspace. I like to look at like sort of buying and selling price points that I might be interested in, and so that's what I'm thinking I'll kind of have a little bit of a look at now. So in terms of recently, so it's while our close yesterday at 26.10 is quite low, it's actually not the lowest it's been in recent times. If you go back to May, there's a bit of 3 days where it kind of really tested the $22.80 mark, it looks like. And so that's, if we're to see like any sort of retreat in the market state based on the interest rate decision, that's going to have a big effect, particularly on sort of tech-related stocks. I feel like that 22.80 is roughly going to be like a bit of a lower point of resistance. So if the stock's falling below that, I think we could see a bit of a major sell-off in the stock. But Roblox is a pretty big company, and they've got a lot of analysts have strong projections for them. But obviously analysts' ratings do get outdated a little bit there as well. But so I think as a sort of retreating point, like you wouldn't want to be holding if it falls below 22.80, because that's where you might see a bit of a major dip then. And how low that could be is really hard to say. If we're to see any sort of upward movement, you probably, the stock in, even this week, last week actually, it was trading above $30. So, you're looking up to that $30 mark anytime soon. That could happen really easily. In terms of if it would have like a proper short squeeze, like a long running one, obviously like people, I was really amazed to see how high the stock actually got the other day. I looked at it, got to as high as 140. Not saying it's going to rocket to $140, but going upwards, I think it looks like on this chart, a major sort of threshold to cross is going to be around the $33 mark. If you can punch through $33, you're kind of looking at your next upward levels of resistance at around, like major ones really up around $42. So it's actually quite a bit of a run there. How do you get a live feed on YouTube? Does it cost extra? Oh, like live streaming on YouTube, do you mean? Like how do I get that? I think I'm not 100% sure, but I think it's got something to do with like when your subscriber count goes up, you can live stream. Like I remember I couldn't live stream when I first got YouTube. So I never really was into the live stream. I just tried it this week and I'm trying it again. So I don't really know what it is, but I believe it's got to do with your subscriber count. I don't know what the count is. Might have been like 500 or something. I don't know. How many? I'll have a look. Here we go. I'll Google it for you. Here you go. How many subs do you need to live stream on YouTube? Yeah, what do we get? Oh, apparently you just need to have 50. So if you get 50, so drop a zero, 1/10 of what I said. So once you get 50 subs, apparently you can live stream. Have you got 50 subs? If you want, I'll try and go back through the comments at the end, and I'll sub you if you're short. So I'll get your number up, okay? So I'll try and get you close to 50. It's a bit of fun live streaming. You know, it's kind of, it's like being on TV, except like 3 people watch you. All right. Anyway, so yeah, and then I guess like beyond that 40, what was I saying? About $42 mark will be the next test. Your next sort of level up is looking at 52. So if you're able to see a short squeeze re-trigger in this stock, which my gut sort of says doesn't seem too likely at the moment, just given the way the market's going. Short squeeze players are kind of a little bit off it. And there's a couple of attempts still with some of those big classic ones like your AMC and your GameStop and that. But yeah, I think the market's, just given the poor sentiment, short squeeze players are a little bit out. And it's a bit sad because I appreciate you. Time following Bitcoin right now, lol. Yeah, Bitcoin. Right off, gone right off. Bitcoin's, it's in that basket of retail things, isn't it? Bitcoin. It's kind of just not happy days at the moment. And yeah, like that's one of those things I was sort of saying that the Fed might need to. I don't think the Fed's really going to care too much about Bitcoin because it's kind of quasi they have no control over it, which is like the whole premise of the thing. But yeah, like the fact that a lot of people have lost a lot of money in Bitcoin recently, and even stocks might weigh in on their decision on whether or not to, or how much they change the interest rate by. And yeah, so anyway, I'll move on from that anyway. All right, cool. So yeah, that's kind of where we're looking at for Roblox. So Roblox, I'm kind of like, from what I see, it's got a lot of good things going for it. I feel like I need to know more about the company before I kind of, try and do like a normal video about it. But yeah, like it's compared to the next 3 stocks we're going to look at, Roblox it looks pretty good. All right, so I'll push on from Roblox. I said I would look at Camber next, didn't I? Camber Energy. This is an interesting one. So yesterday, how did it go? It actually was up for quite a bit, and I think it's got to do with the oil prices, but it did sag down and ended up finishing 0.3% down, but it actually finished flat in the aftermarket. So that's good. Now, in terms of how is Camber going now, so in the pre-market today, Camber is actually currently down by 1 cent. So it's trading kind of flat, but Camber's now, because it's down around that 48, 50 cent mark, it's kind of, the moves down are going to be not as dramatic. It's getting to the point where the dollar value of the share is less than the actual dollar value of assets that the company holds. So you're getting you're actually basically getting turning $1 into like $1.20 or something now, because the thing about Camber, they've actually got a lot of cash. They're very cashed up at the moment. But cash in the bank is nothing at the moment. So it just depends what they do. Oh, there you go. They just jumped back up in the pre-market. They're back to 49 cents. There you go. All right. Anyway, so Camber Energy. Let's have a look how they're going. So we'll start off. We'll go to. Yeah, I think you're right. I think it's going to be a sort of sideways, sort of moving stock. It's obviously like a lot of its price is reliant on what's going on with the oil price, and we'll have a look at that in a second to talk about oil a little bit. But yeah, I think it's one of those stocks that it's going to be trading flat. It's kind of had its peak at the start of that Russia-Ukraine crisis, but that crisis is still going on. But sorry, I can't find where I've got Camber. Yeah, I think you're right. It's going to be something that's not going to do anything too dramatic at the moment. It's one of those stocks that people liked for a bit of a short squeeze. This is like a retail favorite. And the one thing, like I was saying the other night about Camber, is they are, they're putting all these like smaller investments into these new sort of greener initiatives, and there's a good chance that one of them is going to, something's going to come from one of them. But you know, it's all like research. You can spend all the money in research in the world and get nothing from it. So R&D can be a black hole, but sometimes it can be a godsend for a company. But so we've got to see how it's going for Camber. But so there's no real company news coming out, and that's pretty typical for sort of an oil sort of stock. I know it's one of those stocks that does get covered a lot in the media, though. It's one of those ones that there's a lot of media pundits that look at Camber Energy, so there's often bullish and bearish articles. It's a very divided community. Like I did see one come out over the weekend, but there's one, this is from a little bit earlier, 7 popular penny stocks to avoid at all times. Camber Energy is on there. Oh, look who else is on that list. Vinco Ventures, we're going to talk about them soon too. Oh, Mullen Automotive, they've been all over it. Skills, Tilray. Oh, someone's got to pass them the Dutchie, it looks like. I found out that Tilray was the first listed pot stock in America, which is really interesting. Yeah, I actually quite like Tilray, but I think they've got a lot of potential, Tilray. But I'm not covering them today. But yeah, so Camber's on the list of stocks to avoid, and I think that's going back to that issue we spoke about on Monday about Viking Energy not having like the most profitable, I guess, oil well business, one that's kind of generally not been of a high quality, and they're not a huge operation either, so it's not, you know, that's their main source of income. So Vikings oil game's not going really well. It's like, it doesn't bode well for the stock, but they have a lot of cash at the moment, so we've always got that, got a lot of cash. That's right. You know, it's like you can do really dumb things, and you know, as long as you're rich, it doesn't matter. You know, so it's Camber. They're rich, so they can do dumb stuff. They keep digging into the dirt, not getting oil, I guess. Anyway, all right, back to Camber. I think when that actually happened, are they converting Viking shares? So I don't understand. Like, so with the Viking Energy stuff, so they own. I think it's Viking's staying as like a listed company for now. So the way the merger worked, it's not technically a merger. It's basically the way to think of Camber Energy is think of them as like a holding company, and their main asset is something like a 70% stake or 73% stake in Viking Energy. So they have total control of it because they have all the voting power, and you know, all the things that Viking, all these green initiatives are just initiatives that Viking Energy is trying to do. So Camber Energy basically own like 73% of that sort of thing. So it's the good way to think of Camber Energy is think of them as a holding company. But Viking is still technically a publicly traded company, but I think that small amount that is not held by Camber Energy is, you know, it's just held by like someone who, like probably the family who did start Viking. That's just a guess. I don't know that for sure, but it's kind of like they want to stay involved in the business, and they want to stay in control, and they don't want to have Camber as their technical overlord. So I think that's the way. So I think that's sort of as far as that merger sort of goes. So it's just kind of, it's really, they've just acquired the majority of shares in the company. That's my read on it though. Yeah, so I don't think the number of shares is really changing anytime soon. So if you looking at Camber now, in terms of their trading, they've kind of actually traded pretty much in that same range, around 50 cents all week, after having a big sell-off at the end of last week. So if you go back last week, they were as high as 66 cents a share. So, you know, like that's about 30% upside on where they're trading now. And if we flip, like obviously the important thing when you're talking about Camber Energy is to look at what's going on with oil prices. And right now, I know in America, most people look at WTI because it's basically the main American oil commodity, but globally, most people look at Brent crude, which is a little bit more expensive. But, you know, both of them are actually, both oil prices have shifted down in the last 24 hours a little bit. I'll look at West Texas Intermediate. So they're at 115 a barrel at the moment. And, you know, they were up in the 120s as recently as, was that yesterday? They were trading up at 121 yesterday. So they're actually near the all-time high. So in the peak of the oil crunch that came from that Russia-Ukraine crisis, WTI got to $128. I saw, I think it was Goldman Sachs, there was some analyst expects oil prices to continue to raise about $160. And even though, like, you probably, I don't know actually about America, do you still hear a lot in the news cycle in other countries about the Russia-Ukraine crisis? I feel like I never hear anything here anymore about it. They don't talk about it. I know it's still ongoing, but like the war's still happening, but you don't hear about it. But all I do know is it looks like a lot of, particularly the West country, like, I shouldn't use the term West, it's actually outdated, but like the NATO alliance, NATO and friends, will call it, because Australia's not NATO, but we're part of it. Anyway, but those countries are the ones that are, not buying Russian oil anymore. But there's a lot of other countries that are still buying it. So it's, it's not really the problem there. But so the problem is that, like, if the Russian supply is not coming into the general supply, it's going to push up the prices of where the countries that used to buy from Russia get their oil from. So that's the problem we're seeing there. And the good thing for Camber is, obviously, as the oil price goes up, their cost of producing oil, the oil that they can get out of the ground, doesn't really change too much. But the profit for oil, i.e. the markup that they can sell it for, increases. So this period should actually be pretty good for Camber. So while they've kind of lost money from their drilling in recent times, because of the higher price that they can gain for what they do produce, it should hopefully push them closer to profitability. But I guess you have to kind of wait and see till when their next results sort of come out to see if it has any effect. So probably not so much quarter 1, but quarter 2, you'll probably see some of that coming through. All right. So anyway, petrol byproduct. Oil's dropping, and like, it's actually, looking at how it's trading at the moment, it's actually kind of on a bit of a trend down. It did hit a low of about 114.59, but it's kind of back up by about $1 now. So it's kind of on a bit of a downward trend. So I think the oil price and how that goes is going to actually have more of an effect on Camber Energy's price, more so than what the Fed does today. All right. Oil dropping, gas prices keep going up. Yeah, it's interesting. Well, oil's still quite high, I think. Yeah, but gas seems to be like the next big thing. It was interesting today in the news cycle in Australia today. They've never had this happen before, but the governments came out and said between 5:30 and 8:30 p.m. tonight to try and reduce the amount of electricity used, because we think there's going to be a grid failure. And like, a lot of Australia's energy comes from, we do have a fair bit of renewable, but like, a lot of it comes from like oil and gas. So it's interesting. Yeah, you're right about the gas prices there. They seem to be, like, oil was like kind of the one that was booming, but gas is the one that was kind of catching all the headlines now. But like, I think oil's not as bad, because I think that market's kind of matured and moderated a little bit. And I think in terms of where the world buys gas from, it's not as, there's a reason why OPEC isn't a cartel for gas. It's more so for oil. They can't really control gas price, because there's a lot of other countries that can produce gas. I think Australia is actually like the second biggest producer of natural gas. I could be wrong on that. Don't quote me on that. But like, the fact that OPEC countries, OPEC plus, when you consider Russia and Russian friends, they're more concerned with the oil price than gas. But yeah, so yeah. All right. Anyway, might leave it at Camber, because I've realised this is actually going for a long time. The longer it goes, the more likely I have to tend to a crying 6-month-old daughter. So I've got to get moving. So we'll try and do these other ones a little bit quicker. So we'll leave CEI or Camber for that. We'll move on to BBIG. This is another one of my stocks, which has really annoyed me, particularly about the dividend stuff. Changing the dividend date, or the rules around the dividend. Like, I reckon that should be like an SEC investigation for what BBIG did. And so, waiting for that TYDE dividend still. I've still got a position. And you know, like many people holding BBIG, it's been very painful with their slides. So let's have a look. How's BBIG traveling? So BBIG, they actually traded flat yesterday, closed at 196. Actually, didn't realize that, and they gained 1 cent in the aftermarket. So nothing phenomenal, but the fact that they're below $2 is not amazing. Pre-market at the moment, they're actually up by 3 cents at 198.5. So that maybe that's a bit of an indication that that rise is only as of about the last hour. It looks like the last hour they've had a bit of a 3 cent rise, which is good. In terms of have they had any sort of news or anything, BBIG is one. I don't think whenever you look at general news outside of like YouTube and Reddit and stuff, it's kind of Triptide falls on upside share resale ahead of spin-off. Yeah, that's a whole. It's from last week about stock tumbling. Yes, there's not much there, but BBIG is one that kind of gets like stung heaps by the broader market news cycle. And I think like what they did with Triptide, they've kind of really, you know, they're the way that whole dividend thing's been handled. Like I think they first announced it back in maybe about October last year, or maybe earlier even. And it's kind of when they first announced it, it was people held the shares at the end of that month or about 6 weeks away. We're going to receive the TYDE dividend, and then about a week before they delayed it by a week and didn't actually announce it. They just kind of tweaked the one piece of information they had out, so you could actually go and find 2 copies of it, of the press release that they had, and they changed the date by a week. A week's not a big deal though. And then, you know, then it's kind of been like all the whole rumor cycle ever since. And then when they sort of did finally have the date, I think it was back in, was it April or May? I think it must have been in May when they said that was the that was going to be the date of record. And then literally 2 weeks later, I think it was, after the date of record had passed, they said that they've had to delay the distribution of it, and for you to receive it, you had to still be holding your stock since the record date, which is not what a record day is. It's like that kind of, it's so annoying. I know I own stock in the company. I don't want to see the stock go to zero because I own it. I don't own a lot, but like, you don't want to see it go to zero. But the way the board have been acting about all this, like this is why you have the SEC. They should be investigating these people. I don't know. Anyway, all right. Anyway, so in terms of where BBIG is going to go, I don't really foresee too much happening with them, to be honest. They're a stock that can always kind of be often looked at as a bit of a short squeeze. I thought that a rise to 220 the other day might be something that could come in, but you know, obviously the market's not performed that well in recent times. So still, if there was to be a bit of a rally from where we are now, I think 220 is going to still be that next point of upward resistance. And then if to get above that, you basically need to push the stock. It's going to need to push above $2.50 to have any chance of regaining to where it was pre the TYDE distribution date, where it was trading up around post TYDE distribution, where it was trading about $2.80. Now, good thing about Vinco Ventures, they actually are starting to pick up a bit of momentum as a business. I know there was that article that said to stay away from them, but their quarter one results were actually quite good. They showed a lot of improvement. I know like a lot of their revenue increased because of their purchase of AdRiser, but if you took the AdRiser revenue away and looked at just generally income being raised through their low motive platform and a couple of their other small ventures, they actually saw a 61% jump on quarter. So that's actually quite a promising sign. So it'll be interesting to see if they can keep that momentum going forward. So while they do get punished a little bit in the by the broader media, like they've actually starting to show a bit of promise. And I think where you're going to actually see BBIG make some real gains, it's not so much where their low motive platform performs in terms of like countries like the US and Australia, because I don't think they're going to displace TikTok. But India is like a really, obviously a huge market, second most populated country in the world, and TikTok's banned there. So Lomotive's kind of slotting in and filling that role of that short video platform that's doing really well. So it's actually picked up a lot of traction in India. Obviously, well, I shouldn't say obviously, but one of the things that is a problem with the Indian market is generally the cost of advertising is a bit lower, so the profitability for advertising on the platforms a bit less, and you still need to use that same sort of that computing power to power Lomotive and store all the videos that are made on for the platform. So it's still quite expensive to run, and the profitability of advertising isn't as great. But I think they're going to see a lot of growth in usership, and like the people. Not trying to. I don't know why I always say this thing. It's not racist, what I'm saying, but there's a lot of people of Indian descent spread throughout the world, and if Lomotive does get really popular in India, I wouldn't be surprised if you start seeing a lot of people who have family connections back in India around the world start to use the platform as well. So that's something that you could really have. Like if you look at like the similar situation with people of Chinese origin, there's a lot of social media platforms that they tend to use like throughout the world because it's common to use back in China. So Lomotive has that kind of potential to really get that sort of global reach. And I think that's one thing where I think the media kind of don't give them enough credit for. So there is actually a bit of strategy there, I think, with what they're doing. But in terms of what they've done with Tide, they kind of lost me a little bit there. Anyway, so we'll leave BBIG for that. Leave it there for now, because I've covered that one quite a fair bit in the past before. So what have we done so far? We've done Camber, we've done Roblox, we've done Vinco. So I've got to do Exela and Iron Mountain too. All right, so I'll do Exela really quickly. We talked about that quite at length, I should say, the other day. So where are we? Exela. So I don't think Exela's really had too much happening with it. So they slipped another 1 cent. The bad thing about Exela, when they drop in value now, like losing 1 cent is like, like they lose like 8%. So Exela lost, where are they? Here we go. So they actually technically traded flat yesterday, and kind of gained a little bit of ground back in the aftermarket. So that's something, but they are down about 0.5 cent in the pre-market right now, so it's still relatively flat. Like losing 0.5 cent now for Exela is like losing 4% of your share value. It never looks good statistically. Little confession, I actually bought $100 more worth of Exela stock the other day just because it was so cheap. Like, I don't know. I know I've converted most of my stock to the preference shares, because I think the preference shares are like, my gut feeling is Exela is going to be around for a long time. They're a big company, they have a lot of revenue, a lot of key clients. So I have, and this isn't investing advice at all, but I have a lot of faith in the preference shares being honoured for a long time to come. And buying them now, what do they trade at recently? XLP. What are they at? I just looked at my app. So they jumped like after Friday. If you got in on Friday, you could have got them for, where is it? Where are they on Friday? So they're trading down around the $3.65 mark. But in the aftermarket on Friday, they announced that they are going to pay their first dividend. It's going to be higher than people expected. And so they've actually jumped up to $5.39. So they've actually gained 80 cents in the last 2 days trade when everything else has been going down. So you can still buy XLP. They're public, they're traded. And buying XLP now for $5.39, you're going to pick up a 46 dividend if you buy it before the 20th of June. That's an 8% yield just for that 1 quarter. That's 1 quarter, and you're going to get about 37.5 cents every quarter from there on in after that. So it's a good yield, and ultimate goal in investing, I always say, is you've got to beat the inflation rate. So if you can buy in now and you can get 8% a quarter, because because you bought it at such a low price, and inflation is 8% a year, you're beating inflation by 4 times. So, XELA P that's my hot tip for them. But yeah, regular XELA stock though, that's in the gutter. I shouldn't laugh. Someone commented on one of my videos about the other, like today, I think it was, that they'd lost like $30,000 or $40,000 in the stock. Like, oh, I feel so bad for that. Like, I don't throw that kind of money into it. I wouldn't throw that kind of money. I don't have that much money in the shares to be putting $40,000 in Exela, even when it's going really well. I think my holding in Exela, the preference shares is worth about $2,000, and that's gone down though. The liquidation value is going to be closer to 10, but the remaining Exela shares I have are worth about like $400 at the moment. Roblox to the moon. Roblox is looking like the best stock I've covered so far, so to the moon, yeah. Anyway, so Exela, I think Exela P, there's a fair bit of value there. In terms of news for Exela, just have a look. If there's been anything come out. Just check generally first, then I'll go through my platform to see if there's been anything official. Nothing there. Okay. In terms of news from the company, officially, here we go. They did appoint, what are they? Names Lakshmi Narayanan. Oh my gosh, how do you say that last name? Chandra Mohan as president of Bills and Payments. Oh, that's the Bills and Payments business. So that so they've got a new appointment, a new board member. It sounds like, and I think the Bills and I have to double check it, but the Bills and Payments business, they posted something recently saying that where was that one? I think they'd made like 18. They'd signed, yeah, here it is. They'd signed 18.3 million in new contracts. So I think that this new appointment, I don't know very much about the person. I'm not going to claim to, but call Lakshmi, because that's the only name I can actually say confidently. But call Lakshmi. No disrespect to her though, but I just don't feel confident saying her last name correctly at the moment. But yeah, she's I think coming in to take over one of their segments which they've obviously earmarked for growth in the future. So it'd be interesting to see what the background of her is. Maybe something worth having a little bit of a look into. But yeah, it's like that announcement didn't really change the needle for Exela yesterday. So in terms of where the stock's going, looks like it's just going down. It's had, look at that, 1, 2, 3, 4, 5, 6, 7, 8. It's had 8 straight days of losses. And then they had one up day, and then it was 1, 2, 3, 4, 5, 6, 7 straight days of losses. So, that's the way they're going. Over the last 17 trading days, they've actually gone down twice, and that was falling from about 30 cents a share. So it's been a long, slow slide for Exela. To be honest, I don't know. Obviously, they've still got a fair bit of debt on their books at the moment, but they're looking at selling off 200 million of non-connected assets. So they're going to shrink their assets and businesses to pay down a fair bit of debt. That's something that was announced a couple of weeks ago. And the idea with that is that once they've paid down and solidified the debt, they actually apparently want to take part in a proper share buyback. So I think that's what a lot of people were hoping was going to happen with the preference shares originally, but wasn't really mathematically what was going to work out. So yeah, that's where Exela is at. We'll leave not much to really talk about with Exela. Last stock I'm covering. So the reason I sort of said before, the reason why I wanted to talk about this stock, Iron Mountain, is because it's one of my it's been one of my sort of better performing stocks in recent times. And I say better performing in the sense that like it hasn't actually lost too much in value, although it has had a bit of a slide the last week. But the one thing I've liked about Iron Mountain, this whole last few months where the markets have been dropping by quite a bit, it actually went up and held its own up around the $50 to $60 range per share for a long time, although it has had a bit of a drop-off in the last week. I'm not too fussed about the drop-off. What does it say? Yeah, there hasn't really been too much in terms of news. I think the drop-off is kind of a reflection of Iron Mountain as a business. Their business is very much concerned with storage, file storage. So they store basically all the paper files in the world. Most businesses that have to legally hold paper files for 7 years. Obviously, a lot of that's been digitized now, but over the years, there's been a lot of that has been done on paper. There's only been transferring over to digital means now. So Iron Mountain's main business is storing that paper. They also store like rare artifacts and stuff too. So it's not beyond that. That's like another sort of side of the business. One thing that Iron Mountain's actually been doing quite well is they're technically a REIT as well, because a lot of the business is based on retail holding, but they've been actually building a lot of data centers in collaboration with Google. So they've actually got a growing storage business, and a lot of people kind of thought that Iron Mountain's storage business wasn't going to be very good. So, obviously, storage that are going into cloud computing, they're going to be competing with the likes of Amazon and Microsoft and all the big tech companies. But the one thing I think a lot of people didn't realize is Iron Mountain, the fact that I think something like 80% of the Fortune 500 companies use Iron Mountain for storage. They have contacts with all these businesses already. They've already got like an access to a meeting to sign a client to use the data storage. And the fact that they've teamed up with Google too only has kind of helped to expand that. So so it's like kind of one of the things about Iron Mountain. I think they're a very sort of stable sort of company, and they have lost a bit of money in the last week or so with the broader market slide, but generally, they're quite a strong stock. And basically, the reason I bought them is because I think I got them for about $20, $23 a share. I think I paid originally. I've been accruing it slowly, so I can't tell you my average price is a bit higher now, but I bought them for the dividend. And if you look up Iron Mountain dividend, they pay 62 cents a quarter. So I was buying it at about $24 for ease of calculation. I was getting a 10% dividend yield from the bottom of the pandemic, and that's kind of where it's been. It's a very stable dividend. They're a big company. They've got a market cap of $14 billion at the moment. They're a big company. They actually used to be dual listed here in Australia as well, but it was a way that they took over a business, but that's kind of been delisted now. But yeah, so they're a pretty sort of stable business. So I know it's not like one of the super exciting ones that people like to talk about, but I thought I'd throw that into tonight's discussions just to sort of show you that I'm not just about looking at the popular retail plays. I do like to look at it because I do like my approach to stocks is I kind of like to hold a lot. I try to hold about 50% of my stocks in sort of stable sort of dividend stocks, so I'm getting constant cash flow, and then the other 50% I kind of will sort of segment for things which are kind of in that growth sector, but also that's where I'll also play with sort of a couple of sort of retail plays, because I do like to do a bit of day trading to make a bit of cash and stuff as well. I mean, with that cash, I'll either take it out and put it into one of my loans, or I'll hold it and use it to buy either a dividend or another growth sort of stock. So when I talk about like some of the short squeeze plays and stuff sometimes, and one of the reasons I do like, and I'm fascinated by it, is because I think they do present good trading opportunities. Not that I'm telling you what to do with your money, but I don't think, sometimes I like the story behind a short squeeze about like trying to get back at like like the hedge funds and stuff like that. But it's kind of a little bit far-fetched to me. I think sometimes, I don't think generally they're going to win. They won with GameStop. I'll give them that. That was one thing, but I think to replicate GameStop is going to be very, very hard to get. And I think that's what I think a lot of retail investors who were really, not every retail investor was like into that sort of trading, but I think a lot of people have kind of sort of realized that like they're not going to be able to like bring that up with every sort of stock that becomes popular. Like the best short squeeze stock seems to change from day to day, hour to hour. So it's hard to say. But saying that, there's a couple, the GameStop and AMC players are still, they've got a very loyal fan base, and I think that's one of the true strengths there. So I'm always very curious when, particularly, I like AMC because it's got like quite a good stock price in terms of what you can buy in for it. And I actually quite like the business too, but there's obviously a few fundamental problems with it too. The fact that they're not profitable at the moment, but I think that will change pretty soon now that people are back out going to the movies and whatnot. But I do get quite interested when that sort of, I guess, is heating up for a bit of a short squeeze play again too. So that's of those really popular sort of meme stocks. That's one that I do own. I do own AMC stock. I do quite like that. And that's kind of like a recent decision to buy, because I did see that shorts were mounting. And I sort of thought, well, the business is kind of turning around, so it makes no sense for shorts to start mounting. But obviously, there's the argument that the market's starting to go down and cost of living goes up, so discretionary spending on things like cinema tickets goes down, so it becomes, I guess, challenging for them. I'm just shaking my computer up there. Anyway, I can't believe I've spoken for 56 minutes. And I've obviously bored people because everyone's gone off the stream now. But for those who watched, thanks for joining in. It was really cool. Maybe I'll try, if I do another live stream again soon, maybe I'll try and keep it a bit shorter. If you're sticking around and you're still here, let me know if you like or you prefer the live stream video, or do you prefer the shorter content videos. I like making shorter content videos, but sometimes it's a bit challenging. The live stream is quite nice, so I can just go straight into doing that. I'll make a thumbnail first. So it's kind of, that's my plan. I'll make a thumbnail. This is what I'm going to talk about. Yeah, anyway, market's opening in 35 minutes. I hope markets trade in your favour. Cheers.